Welcome everyone, it's Gharouk here, and today I will be going through market trends, bear versus bull market, and kind of depict some of the drivers and, take a look at the macro level of these markets so you as an investor can kind of better understand, where you should be putting your positions or, what should you be adding to your portfolio or how to change your portfolio based on what you believe the market plans to be doing in the next few months. So let's get started. Cool. So definition, so financial markets, it's any marketplace where trading of securities occurs. A few of the financial markets, right, or these markets, you can take a look at like derivatives markets, stock market, bond market, forex market, crypto market, utilities market. Now, a bull market, it's the way it's defined is it's the condition within a financial market, and these financial markets could be anything that I just said, above, where price appreciation or there is the anticipation the price of the assets within these financial markets are going to go up. Right. Now the opposite is the bear market. So that's when the market experiences a prolonged price decline over a period of time. You could say, as an investor, you could say that a particular asset within one of these financial markets is in the bear market, but bear market usually depict the entire financial market. So in this case, let's say we take the stock market. It's when the stock market as a whole has lost value and has been declining for a prolonged period of time. Okay, and so a good example for the stock market, a good way to see whether it's a bear or bull market is if you take a look at the index. And so in the stock market, you have the SP 500 with the NASDAQ, and these are called indexes. And the reason why they're called an index is because they are made up of, several thousand stocks. And so if this index, which is made up of several thousands of different stocks, if the entire index is down 15%, 20%, 22%, over 3 weeks, 6 weeks, 8 weeks, then at that point you can kind of characterize it like, oh, we're in the bear market, right? So let's take a little bit deeper. So just to kind of show you the type of assets within each of these financial markets. So in the first slide, I said, there are different types of financial markets. So if you look in the stock financial market, which we call the stock market, you have Apple, you have Amazon, and the tickers are there. If you look in the commodities market, you have gold, oil, like oranges, right? And so these are things that are naturally produced by the earth. Utilities market, water, sewage services, and electricity. Index. So this is also part of the stock market, but these are a composite, and these are bundling of several thousands of different stocks. You have the treasury bonds and treasury bills market. You have the forex, which is called forex currency exchange market, and of course you have the crypto market. So below I probably put Bitcoin, Ethereum, and Binance, right? Cool. Okay, so ways to determine if you perceive a bull run or a bear market, all right? And so one way to do so is through technical analysis. There are a variety of different tools that can be used within technical analysis. Some that I think off the top of my head would be like moving averages. right? Other ones are like the RSI, which stands for Relative Strength Index or momentum. You have support and resistance bands. You have volume. Right? Another one here is buying or selling pressure, right? So understanding, how much money is coming in and at what prices. Usually, you can get this information if you use maybe like Deck Screener. If you're looking at like Thinkorswim, you can kind of see this at a glance. And I do understand that within the stock market, there are different levels. So if you have level 3 access, I believe that gives you even more detailed information about what's going on in the market. Economy, right? So what's going on in the economy? How's the economy doing? Not only the economy in which you live in, but the global economy as well. Interest rates, right? So monetary policy. What are the interest rates, in the nation that you live, in the country that you live in? What seems to be the interest rates globally around the whole world, all right, with central banks? Geopolitics, right? The politics where you live, but also globally the politics. And this is going to affect every kind of market, whether it's the stock market, the commodities, the crypto market, the forex market. Trader sentiment or investor sentiment, what are investors saying? Where are investors thinking of putting their money? What are investors thinking about what's going to happen? A lot of the times there are crumbs that can be picked up by you as an investor if you pay attention to see the direction in which the market might be going, whether it's a bull market, meaning you believe the price is going to go up for that particular market, or a bear market if you believe the price is going to go down for that particular market. And then also I put job market, so that's like unemployment, how's that looking? So these 7 are drivers. And so let me just talk about the last one, job market. So unemployment, if people are employed and unemployment numbers are very low, meaning people have jobs, people who have jobs, have additional revenue, I would say, than when they didn't have a job. Therefore, they might have the opportunity to invest into some of these markets. When unemployment is high, that is when, if you had a job and you lost it, now you might be taking money out of the markets because you need to pay off, some of your everyday bills, your monthly bills. So understand that, outside from these 7s, there are other drivers that you can use and that you need to learn and that you need to read about to know exactly, or to make a guess, an educated guess about where you believe the market will be. Now, one thing I do want to highlight before I move on is that no one really knows where the market's going to be 3 months from now, 7 months from now. Everyone can guess. And the reason I say this is because I think back to 2020. And so what I want to reference is COVID, which was a black swan event, meaning black swan, it was something that no one could have seen, right? It was something that kind of happened unnaturally. And so because of this, no one knew COVID was coming. And at that particular time, I believe the stock markets fell by, I think, close to 20 or 22%, something like that, right? And so I don't think that any investors in their mind knew back in 2016, back in 2018, back in 2019, saying, oh yeah, the stock market is going to go down 20% on this day, right? So we can all make guesses and estimates and educated guesses about what we believe the bull or bear market in the direction it will take place in, but know that, you have to pull information either on a daily basis or on a weekly basis, depending on how many times you're trading, whether you're day trading or swing trading, to ensure that you're utilizing the most recent information data to position yourself for success in the market, however direction it might go, up or down. Boom. So this is a bull and bear market graph, and it kind of, in the blue you see all the bull markets, right? And that in the orange you see the bear market, and I think the length of time, it's something that I appreciate here. And they actually had February 19, 2020, and you can see that the market actually went down about 26.7%, right? And it lasted almost a month, 0.7, so less than 1 month. And you can see that most of the times a bear market is when it hits about 20% or a little bit more than 20%. I mean, 19.9 here if you round up, that's 20. And usually, there are prolonged amounts of bull markets. So there's a prolonged amount of time when the market goes up, and anything that goes parabolic, anything that goes up indefinitely, must come down eventually. So I think this is what we're seeing. And if you follow it carefully, you can actually see it. Look, starting from 1932, you have blue, then you have orange, blue, orange, blue, orange, blue, orange. And it just follows that pattern, right? And sometimes this pattern, like this is a black swan event, but most people would say, we were kind of overdue. If you take a look, 2007 was the bear market, 2009 was the start of the bull market. It's been almost 11 years, right, before we had one. So, and this is 131 days, right? So there you have it. You don't necessarily go from bear to bull market that quick. It may happen, but based on this information here, and this information is of the stock market, right? So crypto market's a little different because Bitcoin tends to have higher volatility than stocks. And then it's the same picture, right? It doesn't go up to 2020, I apologize, but you kind of can depict exactly the value, the duration of the returns, and the total returns as you enter a bear market and right after that, and then bear market and right after that. So pause here and take a look at it. It's really neat graph. And then Bitcoin, right? We're talking about cryptos. Here it is. I believe the inception of Bitcoin was around 2009. And here you can see, I'll point out a few things here, right? So we can categorize this right here as a bull market, and then it's a bear market, and it stayed flat, and then you have the bull market, and it kind of came down, bear market. I would call this a bull market because it did go up in price, but then it came all the way back down to a bull market, right? And it jumped here, but it was still bear. It was accumulation, and we'll see that in the next graph. So it stays flat, and then you had like a small pumps here, and then you got the actual bear market, and it went parabolic. To my understanding as an investor, every time I've seen anything that goes parabolic, and we see it here, that's parabolic. We saw it here, that this is also parabolic. You can see that it has to revert back down to an area of support, an area where there are equal buyers and sellers, right? Anytime it goes parabolic like this and up, bull market, there are more buyers than sellers. Anytime it goes down, there are more sellers than buyers. And as you can see here, it went up and it came straight back down, right? So this picture depicts a little better the bull markets, which are in green, the bear markets that are in red, and then the accumulation phase. So that's a little bit of where in this case, Bitcoin tends to have, go up and down in value. It's not really entering a bull market or a bull market or a bear market. It's more at an area where, people are buying or selling in equal magnitudes. And the price isn't, shifting heavily in one side or the other. It does go up or down, I would say that. So if you take a look here, I mean, it does go up and it goes down, it goes up and it goes down, it goes up and it goes down, right? And same thing here, it went all the way up and then it goes down and then back down, right? And eventually you have this new bull market. And it's the enter of the new bull market, usually if you take a look here, and this is where TA comes into place. So I'm just gonna give you my 2 cents real quick. It's usually when it, this is the higher high here, and it never got past. So usually when it starts to hit, and this is the lower high, so usually when it hits that lower high and it gets past it and you make a higher high, then you can say, oh, we're in a bull market, right? If it continues. Same thing here, right? So you have, here's the high, a lower high, and then lower high, and it hit here. If you take a look at that, you see, boom. And it continued, right? So there you have it. And lastly, the last one I want to show you is the correlation between Ethereum and Bitcoin, because if you want to have an understanding of exactly where, if you're in a bear market or a bull market, rather than looking at one particular project or one token, since this is crypto, I would say take a look at Bitcoin or Ethereum and see what they're doing. They usually have a good one-to-one correlation, right? And here, for instance, there are times where they deviate from each other, but usually they coincide. So this is a log-based graph, and it shows you, it kind of depicts the magnitudes of which they both go up and down in price. So here you can see that there's a bull market, then there's a bear market here, and you can kind of see them kind of, go down. And if you see the amount that Bitcoin went up, Ethereum didn't go up as much, but it did go down, and then Bitcoin actually went down. And you have the same flow here, right? So linearly, 1-to-1. And I think there's a point where they actually deviate from each other. Where was it? It's around here. You can see that Ethereum kind of goes up in price and Bitcoin is falling, and eventually they kind of meet, with each other. And it's pretty funny. If you look right here, you can see that they're almost kind of 1-to-1, right? They overlap here. So yeah, that's essentially a bear and bull market. Know that as an investor, you have to take a look at the bigger pictures, the macro level. If I'm looking at the stock market, I would take a look at the NASDAQ and the S&P 500, since those are a bigger portfolio. They kind of hold more volume there. And I mean, they're also a composite of the smaller stocks. And so when we think about bear or bull market, I have a tendency to look at those. If you're looking at the crypto world, I will take a look at Bitcoin and Ethereum, potentially in Binance, but definitely Bitcoin. And one way to understand exactly where we are and where we might head is to evaluate what's going on in the world. There's a saying that history usually repeats itself. So if you can capture moments like this that have been in the past, and you can come with an understanding of some of the results or conclusions and how that has affected the markets that we talked about, whether it's the bond market, the stock market, the forex market, the commodities, then you can position yourself to say, hey, my educated guess is I believe this is going to happen. This market, whether it's forex, is going to be a bull, the commodities is going to be a bear. So let me put my portfolio, XYZ. And there you have it. I would say to do research and take the latest information to better yourself at knowing exactly how to position your portfolio based on what you believe will occur. And also use TA. Go to YouTube and learn about TA. Zach, within our Cryptonairz Discord, he did a 6-piece TA course, which is incredible. So if you want to learn about TA, if you want to learn the insights and now how a professional has gotten so much experience, please go into the Discord. And I believe within the YouTube, those TA classes should be available. And I'll see you next.